Welcome to the Recon Trader. In today's video, I will share with you updated technical analysis on the Bitcoin chart after it dumped yesterday. So let's get right to the charts. And we'll start with the one-day candles for Bitcoin. And in yesterday's video, I had mentioned the level we were really watching was this 45,500 level. If Bitcoin's price broke down below that, then I would be opening a short, which I did open up, and I took a nice profit, perhaps a little too soon, but nonetheless, it was according to my battle plan. So I actually did jump into a short position after Bitcoin broke below the 45,500 level that I mentioned in yesterday's video. Now, if you missed that video, you might want to shoot that subscribe button so you don't miss these videos where I go over the charts for Bitcoin and look at these very important price targets. But with that being said, I did mention that the support level I would look for Bitcoin to actually bounce from would be somewhere between 42,000 and 40,000, and it did actually sell right off into the 42,000 and change level, and it has since popped up to just above 43,000, but it is not showing any real strength at this time. So there is the good possibility this could just roll over back into this 42,000 or the 786 level on the Fibonacci extension, and that puts us at around 40,600. Now, before we get too far into the weeds, I would like to pull up a market structure chart to give you an idea of what type of structure we're looking at right now on these daily candles. And in reality, while it may not seem like it, we're actually looking at a bullish market structure on the one-day candles. We've basically had the ABCD phases, and right now we are essentially in an A phase, and the question is whether we then see a bullish move to the upside or a bearish move to the downside off of the A phase that we're currently in. But if you look at this market structure, your A phase is kind of your accumulation phase. Then you get the buying or the B phase. The C phase is what's kind of considered distribution or the selling, and then the D phase is kind of a dump phase into your next A phase of accumulation, which could then lead into your next B phase of buying back towards new all-time highs. Now again, looking at this bullish structure, this looks almost identical to the current Bitcoin chart on the one-day candles. If we look all the way back to around the beginning of December of 2020, we see the A phase down here of accumulation, which then broke out into a B phase of buying. The next phase was the C phase, where people were basically starting to take profit. And then we got the D phase of the dump in May of 2021. After the dump, we get another A phase, and the market basically moves sideways before we get our next B phase back to all-time new highs. And then we get another C phase, another D phase dump, and now we are currently in another A phase of this market. And now the question is, are we going to move up to the next B leg of the bull market, or will this roll over into a bear market, and that would be the B leg of the bear market? Regardless of which way this goes, we're currently in the A phase of what is considered market structure. Again, jumping back over here, we can see the ABCD move that we saw earlier last year. And then about in the middle of last year, we get the A phase, B, C, and D phases play out. And now we're currently in our new A phase. And the question is, will the next B leg be up, or will the next B leg be down? And if it's down, then we're looking at a bearish market structure. The B leg would be shorting, and then the C leg would be people covering their shorts, basically taking profit. And then you'll get a D leg, which when you take profit on a short, you have to sell, which means there's generally a lot of buying. And so you kind of get a dead cat bounce into the next A phase before the next sell-off. So if we jump back over here to the one-day candle chart for Bitcoin, again, we see our A phase at the beginning of this bull run. It runs up on the B leg. we get our C leg, our D leg, another A leg, the next B leg, another C leg, the dump of the D leg, and now we're in the A phase of this current bull market. And so now one of the key levels we need to keep an eye on really is going to be the 786 level on the Fibonacci extension, which is at 40,600. Let's even just call it 40,000, which would be kind of in line with this 39.6 low that we found support at previously back here. If we break down below those levels, we are more than likely to see this B leg of the bear market sell off back into the lows of, say, 28.8 that we saw back in May of 2021. So from that level, we might see some support and sideways movement, and then perhaps the next leg down, or we might get that dead cat bounce and then a further leg down into the bear market. Now, on the flip side, if this 42,000 to 40,000 level holds as support, we could continue to chop along for perhaps another month, maybe two, and then get our next B leg up to new all-time highs, which would be higher than the 69,000, obviously. And again, if we look back at the chart, we can see a lot of similarity in both of these moves to all-time highs. At the beginning of this bull run, we get a run up, and then we get kind of what I would call a bear trap, and then we run up to all-time new highs, and then we dump down and then go sideways. And then the second leg of this bull run is very similar to the first leg of this bull run. We get the run up, we get another bear trap, and then we get a run up to all-time new highs with a sell-off, and now we're moving sideways just like we were back here. And so right now we're basically looking at an A phase, and the question is, do we break out towards the top side, or does this roll over into a bear market? And with that being said, for the bulls to go on the next B leg of the bull run, they're going to need to get above, first of all, the 45.5 level. That is going to be a pretty difficult level of resistance because it was such a strong level of support. After that, then we're looking up at around 51,000, which again we see act as a pretty strong level of resistance. From there, we're looking up at around 55.5. That might be where we get another one of these bear trap sell-offs before the final leg up. And if we do get that final leg up, we're certainly going to need to get above the 61,000 and 69,000 before we can actually reach all-time new highs. Now on the flip side, the bears actually have a lot less work cut out for them. They're already pushing this price down towards the next level of support that they need to breach. If the bears are able to breach through the 42,000 and then the 40,000 level, then more than likely this will roll over back down towards around 28.8, where we saw support previously around the 30,000 to the 28.8 level. So I think that pretty much wraps it up. I just wanted to do a quick update since I had mentioned yesterday that if the Bitcoin price broke up or down, I would do an update video. And since we got the dump down, I was getting a lot of questions of what's the next move for Bitcoin. And so I think we've got that covered. So if you like this type of technical analysis on crypto charts, you might want to shoot that subscribe button. If you like this video, do me a favor, spike a like. If you have questions or comments, drop them in the comment section down below. And remember, never send your money into battle without first doing your recon. See you in the next video.